JSE All Share, no exception to the sell-off yesterday, down 3%. But today, the key thing will be GDP figures set to be released at 11:30 a.m. Consensus, 3.2% contraction for the second quarter. What is your view?
Probably slightly more than that, probably around the 4% level, but not major more. What we're seeing is that we know that mining actually grew in this quarter, whereas in the previous quarter it contracted. So whereas most of the other sectors will be negative, we'll see some positive growth from mining, and we'll see some positive contribution from the net foreign trade, because we seem to be importing less and exports seem to be doing reasonably well.
And the role of the consumer in this GDP number, retail sales contracting 6.7% year on year for June.
All the consumer-driven sectors will be strongly negative, and that's really what will drive the 4%, around about 4% contraction in the economy.
It's quite interesting to note that the consumer has been very subdued globally. Japan's GDP number came out yesterday, showing growth of 0.9%. It really attributed to exports and, of course, government stimulus. But once that is all taken away, and if exports aren't kept at the levels that it's at, and government stimulus is taken away, will the consumer be able to step up to the plate and fulfill that demand?
That's the big worry, because what you're seeing is that in the absence of a lot of numbers from companies, there's a lot of focus on growth and the sustainability of growth. So the Japanese number didn't really surprise on the downside in total, but the composition of it was what worried investors, because investors are very worried that once the government stimulus, which is not sustainable, is removed, how does the economy go forward from there? And that's not only in Japan, it's actually a worldwide issue. And especially the big issue is in China, where there's very strong growth, but you actually need quite a lot of reform to get consumers going in China, because the Chinese have come to the party big time as producers, but not yet as consumers.
But there's also a contrarian view that things will be what we think they should be. In other words, growth will be sustainable going forward.
If you study economics, you see that one of the big issues in economics is always the multiplier effects. And what we've seen over the last 3 quarters are very strong downward multiplier effects coming from the credit crisis. And that seems to have been stabilized. So once you get that downforce out of the way, growth could actually surprise on the upside. So I think that my personal opinion is we're going to have a very strong 2010.
Finance Minister Pravin Gordhan yesterday said that South Africa is lagging the rest of the world in terms of a recovery. Do you think we will be lagging? We lag to get into a recession. Do you think we'll lag to get out?
We will almost certainly lag, and one of the reasons is that we are one of the countries that had an excess of credit, and we have to work through this excess of credit creation that happened over the last 3 or 4 years. And we don't really come out of recession until the banks start to lend again, and that only happens once property prices turn around. But we seem to be bottoming out on that, so maybe we'll get some growth next year.
Well, what seems to have turned around this bull market or bear market rally, or whatever you'd like to call it. We had quite a big sellout yesterday in Asia, and it was filtered through into Europe and the US and here in South Africa. Do you think that this is finally the correction that everyone's been talking about?
I think a correction at this stage would be healthy, because what we've seen, if you look at the market in March, it was saying we don't know where the bottom of this thing is. It's recovered to the extent where we now need substantial growth to validate commodity prices and share prices. And unless we get some quite strong growth, the market needs to come back a bit.
And how much do you think it's going to come back by?
Traditionally, it comes back by about 10%, but that still means that what we'd be seeing now would be a correction in a bull market rather than a continuation of the bear market.
So if you'd like to get into the market, you should wait a little longer, hold off a bit.
I think that if you're not in now, you've kind of missed out on the first round, and you're probably better off being a little bit patient to get in again.
So where would you say there's a significant value in the market right now, Wikus?
I still think banks are good value. I think that all the commodity stocks are quite extended, especially at the current levels of the rand. So I would rather say look at the banking sector for value.
And in terms of the resource stocks, they seem to be one of the favourites right now. We've seen commodity prices rise. You mentioned the restocking that we've been seeing happening, and clearly commodity prices is a big risk involved, because once the restocking stops, that could impact commodity prices negatively.
There's also been some speculative activity in the commodity side. So oil, for instance, and some of the other commodities probably being pushed as a recovery play. whereas what we need to push commodity prices from here is some fairly strong growth, and it's not clear that we'll have that in the short term.
Taking a look at the rand, even though the dollar has been gaining some ground in yesterday's session, we held up relatively strong in comparison to what we saw the rest of the emerging market currencies doing. Do you think that the rand is just fundamentally strong at this stage?
I think it is fundamentally strong because what you're seeing is our imports are very weak, and it looks like our exports should be recovering with the world economy. So it looks like our current account deficit, which has been the bugbear for the rand for a while, is going to be closing significantly.